What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Monday out there. Hope you guys are having a good start to your week. It is Monday, so Bitcoin Fundamentals Report Day. We're going to go through my weekly newsletter. It's the most comprehensive newsletter in Bitcoin, covering all the sectors, news, Bitcoin headlines, macro, price, mining, layer two, if there is stuff for layer two. Let's jump right into it. Bitcoinandmarkets.com. That's where you can find my stuff. I'm going to go this way. Switch them. There we go. Bitcoinmarkets.com. Bitcoin Fundamentals Report number 306. Also, guys, I am live streaming on YouTube, Rumble, Twitter, and Telegram. If you're watching on Twitter, where a lot of the live views happen, jump over to YouTube or Rumble. Like, comment, subscribe over there. Appreciate that. Helps the channel grow a lot. Trying to get to the 1,000 subscriber mark. So go over there and subscribe. I appreciate it. Also, if I get things wrong on here, guys, many of the viewers, especially the guys on Telegram, have corrected me a lot in the past. So if I get stuff wrong, correct me. I'll go back into my report and fix things. But I go through all of this news so you guys don't have to. And then we have conversations about it. So you can jump onto the Telegram, go back and forth with the conversations, try to learn exactly what's going on here in Bitcoin and macro. All right, so here we have Bitcoin Fundamentals Report number 306. Lots of Bitcoin news this week. Not a lot of macro news, but we will see that as we go down here. You can do quick navigation. These are all the different sections of the podcast. And I'd appreciate you guys if you support independent content. You become a member for $5 a month. You can also subscribe to the premium tier, the professional tier, and get my premium newsletter that comes out once a week on price. Okay, so snapshot of Bitcoin. We are trying to break out. We're going to take a look at the live chart here down below. Media sentiment is positive. Lots of stuff coming out about Bitcoin. Larry Fink talking out there. People on CNBC all over the place. It's very positive right now. It was neutral or negative the last month or so, last maybe 3 weeks, because it was very slow news. It has very much picked up here this week. Network traffic is very low. We'll take a look at mempool and all of that. Low revenue for the mining industry. Okay, so price section 63. Hold on, am I muted somewhere? Am I muted? No. All right. Price section at the time of writing 63,458. Stand by here. We're getting some. Is Twitter not working? We are getting some messages that Twitter is not working. Stand by. Oh, no. Twitter is working just fine. Okay. Market cap is 1.2 trillion. We have broken back to 1.2. It had been under that mark for a long period of time, but now we are back at 1.25 trillion. Satoshis per dollar, 1575. And if you're new to Bitcoin, this will continue to go down. As Bitcoin price goes up, we'll eventually hit 1,000 Satoshis per dollar. Then we will hit 500 Satoshis per dollar. And that is the purchasing price of Satoshis increasing. Or some people would say the purchasing power of the dollar decreasing, but mainly it's Satoshi's increasing. Okay, 1 finny, that's 1/10,000th of a Bitcoin, is $6.35. This is just a denomination I came up with, and I'm going to stick with it until it catches on somewhere. Previous difficulty adjustment was plus 3.5%. However, the coming adjustment in 1 day is going to be negative 5%. So that low revenue for the mining industry really affecting the hash rate right here. But of course, as price, this is an all-time high difficulty right now after this 3.5% increase. But we're not at all-time high prices. So once we start attacking the all-time high, we're going to see the hash rate really skyrocket and difficulty skyrocket as well. Mempool, under 100 megabytes at the time of writing, 696 megabytes. That's all the transactions waiting to be confirmed. Fees for the next block, $1.24. At the time I checked this, it was spiking a little bit. So take this with a grain of salt. It's probably back under $1. That's 14 sats per virtual byte. Low priority fee. So if you want to wait an hour or two, you can only pay 70 cents. Lightning Network capacity, Bitcoin capacity continues to grow, almost 0.5% increase this week, but channels barely negative, not even registering on the percentage there, decreased by 6 channels. So Lightning Network is hanging strong, not increasing particularly quickly or anything like that. But once the Bitcoin price doubles, the capacity, it won't double in Bitcoin terms, but it will double in value terms. So as the addressable market on Lightning Network approaches, say, I don't know, 100 billion or 200 billion, it's going to attract more users. It's going to attract more demand from retailers that want to capture that Bitcoin. So this has been an argument throughout Bitcoin's history. Do we need to spend it? Do we need to form a circular economy? And not really. I mean, a circular economy with a $1 million market cap is kind of a waste. It's a dream. You have to get the market cap first. First comes the market cap, then comes the demand, then comes the circular economy. So with Lightning Network, it might grow to be something great, but we just have to wait until the market cap within the capacity of the Lightning Network is large enough to attract those sellers and those Bitcoin users. It will come. It will come. I mean, if Bitcoin 5X this cycle, that's 5X the capacity in dollar terms. That's 5X the purchasing power in Lightning Network. So that can attract a lot more business and a lot more adoption. All right, moving down, we get to our headlines. So the biggest headline coming out, really coming out of the gate, was it Friday or over the weekend even? Was the SEC approving options trading on BlackRock's spot Bitcoin ETF. This is a article from Bitcoin Magazine, and just quoting directly from that article, the SEC has granted approval for the listing and trading of options on BlackRock's spot Bitcoin ETF. The approved options on IBIT will be physically settled, meaning that when the option is expired or exercised, Bitcoin will be delivered to fulfill the contract. These American style options can be exercised at any time before the expiration date, providing flexibility for traders. According to the SEC, the listing will follow the same rules as options on other ETFs, including position limits and margin requirements. The SEC highlighted that this approval would allow investors to hedge their positions on Bitcoin using the options market to mitigate the inherent volatility of Bitcoin. Important note, and actually this is a misquote. I shouldn't have put that in there. This is just one stage of approval. The CFTC has to approve as well before they officially list, Balkunis added. The other two don't have a clock, not sure when they will be approved. A big step, though, nonetheless, that the SEC came around. So this isn't going to be imminent. We are waiting for the CFTC to also approve this, but it looks highly likely that it will happen relatively quickly. Balkunis and Seifert from Bloomberg, they're the ETF experts from Bloomberg. They were thinking that this would happen by next May. And this happened right now in September. So the CFTC could turn around and approve this fairly quickly. The bankers want it. The bankers want it badly. BlackRock wants it badly. And so their connections and all their influence is going to be pressuring this to get this done very quickly. So I said this explanation received over 1 million views. So we're going to go through this. Who was it that shared it on Telegram? I just said it earlier when we were looking at on the pregame show on Telegram, but let me go back and see who posted this in Telegram to give them the credit. Simon posted it here in Telegram. So, all right, let's go through this. This is an explanation from a big time trader, I guess somebody that really knows the options market. I'm no expert on the options market. Wish I knew it better. I understand the basics of it, but this is from Jeff Park on Twitter, DGT10011 on Twitter. And I broke it into three here so we can expand it and read it a little bit more easily. So let's go into this. With today's approval of the SEC to list and trade Bitcoin ETF options, I shared that we are on the verge of witnessing the most extraordinary upside vol of vol in financial history. I felt this deserved a fuller explanation, so I want to highlight a few characteristics of Bitcoin, the nature of the regulated options market, and the powerful combination of the two. Without exaggeration, this marks the most monumental advancement possible for the Bitcoin market. For the first time, Bitcoin's notional value will be fractionally banked with ETF options. What do I mean by that? While Bitcoin's non custodial cap supply is its greatest virtue, it has also been a drag, limiting its ability to create synthetic leverage. Despite Deribit's efforts, it never adequately solved the counterparty versus capital efficiency matrix for wide adoption. The CME futures options required too much active management. Now, for the first time, Bitcoin will have a regulated market where the OCC protects clearing members and counterparty risks. This means Bitcoin's synthetic notional exposure can grow exponentially without the JTD risks that have kept investors at bay. In a liquidity driven world, unlocking synthetic flows with leverage represents the greatest opportunity for Bitcoin ETFs, enhancing their financial utility compared to spot markets. Oh, and he is not done. Additionally, Bitcoin can now express duration as part of a leverage calculation for the first time. Retail traders have embraced perps to take on leverage, but these instruments are imperfect, more akin to a series of daily ODTE options that must be rolled over constantly. With Bitcoin options, investors can now make duration-based portfolio allocation bets, especially for long-term horizons. There's a good chance that owning long-dated OTM calls as a premium spend will give investors more bang for their buck than a fully collateralized position that could drop by 80% over the same period. People often compare Bitcoin to a call option due to its premium decay and occasional explosive upside. Now you can bet on vol of vol to the upside with the same or less premium while capturing more delta over the longer time frame, an extremely compelling opportunity. So again, I'm not an expert. I don't know exactly everything that he's saying here, but it sounds very good. It sounds like what they're doing is it's just another layer of um, the ability to hedge. So you can hedge, you can trade the volatility, you can hedge against the volatility and duration. So right at the top here, where he says express duration as part of the leverage calculation, pricing will become more efficient. We might, with these type of tools, we might not see the 80% drawdowns like we have seen in the past. They will be, we might not see the 20x upside with 90% drawdowns. We're going to see maybe 5x upside with 30-40% drawdowns. So it's going to minimize the volume, allow people to hedge, bring in the duration piece into the calculations. And so I think this is very important. Bitcoin also has unique volatility characteristics, and one of the most important is the volatility smile. Most equities indices display a volatility skew where upside vol is cheaper than downside vol, i.e., protection is more expensive than speculation. Bitcoin is unique because melt-ups are as frequent as meltdowns, so the market demands a risk premium on both sides. The practical implication? It's seen as the second order Greek called Vanna. I think that's how you call it, Vanna. Historically, all call options, as spot rises, implied volatility tends to fall. So while the option delta increases, the rate of increase slows. This is a positive Vanna, which creates a sort of drag. However, Bitcoin options have negative Vanna. As spot goes up, so does volatility, meaning delta increases even faster. When dealers who are short gamma hedge this, a gamma squeeze, Bitcoin's case becomes explosively recursive. More upside leads to more upside as dealers are forced to keep buying at higher prices. A negative Vanna gamma squeeze acts like a refueling rocket. In more layman's terms, I would say that this is demand rises as price goes up, which is a backwards sloping demand curve. Okay. Usually, as prices rise, demand goes down. Okay. But with Bitcoin, demand goes up as price goes up. So it's a Veblen good in that way. It's a backwards sloping demand curve. And these options are going to give a way to hedge against this. Okay. So let's continue. The most crucial factor that ties all this together. Bitcoin itself cannot be diluted to accommodate this newfound leverage. Compare this to stocks like GameStop or AMC, where management can issue new shares to exploit pricing anomalies, putting a cap on the stock's rise. Bitcoin can never do that. You might ask, but Jeff, what about commodities like oil and natural gas? Aren't they comparable? And if so, why is Bitcoin different? The key difference is most physical commodities have expiration dates, meaning they tend to trade with the futures market, not the spot market. Futures markets, unlike spot markets, vary in gross and notional exposure based on expiration dates and net interests of physicals versus paper. So they don't allow focused participation in one direction, i.e., people trade both long and short on the curve and physicals versus paper. However, these markets are subject to supply manipulation by groups like OPEC, among others. And I would say, just straight up, natural gas and oil, as price goes up, it courts more supply from the market. So it's the same sort of thing from GameStop or AMC. As price goes up, there's incentive to produce more. Bitcoin, you can't have that. In summary, the Bitcoin ETF options market is the first time in the financial world we will see regulated leverage on a perpetual commodity that is truly supply constrained. Things will likely get wild. In such scenarios, regulated markets may shut down, but the remarkable thing about Bitcoin is there will always be a parallel decentralized market that can't be shut down, unlike GameStop, which, as you can imagine, will add even more fuel to the fire. It's going to be unbelievably fantastic. All right, so that's cool. Big things changing. This is, again, we're waiting for the CFTC. We're waiting for the CFTC to come out and approve this. The SEC's piece has been approved way sooner than expected, so the CFTC's piece could be coming out soon as well. Don't know if they will do it prior to the election, but it's coming. It's in the pipeline and most likely will be approved relatively shortly. All right, let's go on. Next headline, MicroStrategy buys more Bitcoin. Again, quoting from Bitcoin Magazine, since 2020, MicroStrategy has adopted a Bitcoin-focused corporate strategy, taking advantage of Bitcoin's potential as an inflation hedge and store of value. The company has accumulated over 252,000 Bitcoins worth more than 15 billion, with a basis of 9 billion. So they've almost doubled their investment. They're up like 60, 70%. MicroStrategy has borrowed money by issuing convertible senior notes to fund its Bitcoin purchases. It recently raised over $1 billion through note offerings, partly to acquire more Bitcoin. Other public companies have emulated this by Bitcoin corporate strategy to take advantage of Bitcoin's growth. MicroStrategy's Bitcoin treasury purchases are like a large-scale speculative attack against fiat currencies. Okay, so from a longtime Bitcoiner, what this means. This speculative attack, I don't think it was invented by who was that writer? Michael something. God, why can't I remember his name? Anyway, Nakamoto Institute. I don't think it was Pierre or Bitstein. It was the other guy, the Bitcoin Cash one, and he coined this term speculative attack. But in Bitcoin, this was a term used in other markets before. But the idea here is that you borrow fiat currencies that are inflating and you buy Bitcoin. So you borrow $1 million at 5%, and then you buy Bitcoin with it. Say it's a 5-year term, and you buy Bitcoin, and Bitcoin's going to go up a lot more than 5% per year. And so you can keep doing that. And that's what Michael Saylor is kind of doing. He's borrowed this last billion was raised at a 0.625% interest rate. So he's getting basically free money and then buying Bitcoin with it. So this is definitely a large scale speculative attack. And what that does is it actually forces down the price of dollars. So the relative, by doing this, by borrowing dollars and selling it, because what happens when you sell something, the price should go down. If there's a large scale selling activity, the price, all else equal, should go down. And you're buying Bitcoin, and so all else equal, the price of Bitcoin should go up. So you're kind of, by this large scale speculative attack, it's built in to be profitable. It's built in to be profitable. And that is what Michael Saylor is doing. By exchanging fiat for scarce Bitcoin when it is undervalued, the company could reap enormous returns if Bitcoin continues appreciating as a global digital store of value. All right, so that is MicroStrategy. BlackRock, they had a shockingly bullish report on Bitcoin last week. We went over this on Friday in a live stream. You guys can check that out here. Real quick, the bottom line is Bitcoin is uncorrelated according to BlackRock and does not fit into the typical risk-on, risk-off paradigm. So it is not a risk-on asset. Many people try to put Bitcoin into that mold, but it is not a risk-on asset or a completely risk-off asset. There is a flight to safety quality, and we are in an era of heightened global and domestic risk. So that's how BlackRock is putting this, not Ansel Lindner, BlackRock. And you can argue with BlackRock, but they've been saying this. This is pretty much the same thing that many Bitcoiners, including myself, have been saying for 10 years. It is an uncorrelated asset. It's a safe haven. It is fulfilling the flight to safety. And so in a recession, as long as it's not a major banking crisis scare like a COVID crash or a repo rumble where things just break on one day, that can send the Bitcoin price down. But overall, a recessionary grind will be good for Bitcoin because it is acting as a flight to safety. All right. Next headline. Trump makes stop at a Bitcoin bar in New York City. You guys probably saw this original video, but I just wanted to include it here because it was big news this week and pretty cool. I heard there was a mix-up with the actual transaction. It made Bitcoiners look kind of bad, but whatever. It's the future president, former and future president of the United States, using Bitcoin with Bitcoiners all around him. So this is a pretty big deal. All right, before we go on to the next BlackRock topic, let me see the chat. Dex Invictus back with us. Excited for the options chain. Options chain. You mean to change? Yeah, it's going to be a huge, huge deal once it gets approved. Let me see. Telegram. Spegball. There. No, Daniel Krawitz. Thank you, AJ. Yes, Daniel Krawitz or Krawitz. Yes. The guy who had the unicorn avatar and all that, or it was like a blue moose or something as his avatar. He was like a furry or something. I don't know. He early on with the Nakamoto Institute, I don't want to like disrespect his early work in Bitcoin, but then something happened and he kind of went off the deep end during the Bitcoin Cash thing, uh, the scaling conflict, and he's gone. He's never been back to Bitcoin. Maybe he's still around Bitcoin Cash. I don't know. AKA Fluffy Pony. No, that was not Fluffy Pony. Fluffy Pony was wasn't that the Monero guy? BSV show. Yeah, Fluffy Pony was not Daniel Krawitz. That was the other guy. But anyways, okay, let's move on to where am I at here? Okay. Moving on to the next topic, BlackRock amends Coinbase custody agreement to require 12-hour withdrawals amid debt rumors. All right. So when they filed all their ETF stuff, they had all of this stuff just by the letter. What is their agreement for custodying Bitcoin, for trading Bitcoin? How is it going to work? And they were using Coinbase here. There's only one that doesn't use Coinbase, and that is Fidelity. I think they self-custody their Bitcoin, which is pretty based. But Coinbase, they had to update this agreement. And right at the same time, there happens to be all of these rumors floating around about Coinbase and paper Bitcoin. And so people are trying to put two and two together and say that these things are related. I don't think they're related, but let's read through this here. A key development surrounds BlackRock amending its Coinbase custody agreement to enforce a 12-hour withdrawal windows. This comes amid rumors that Coinbase isn't properly allocating Bitcoin to IBIT, or that there's paper Bitcoin going on in the background. Okay. Instead of issuing debt to fund, instead they are issuing debt to fund their Bitcoin holdings, a theory similar to the long-held beliefs about paper gold manipulation. However, this scenario is highly unlikely, in my opinion. It is extremely illegal and it is risky. Coinbase would not engage in such practices. Now, there is a chance that, less than 1%, probably a 1% chance that Coinbase is doing something with paper Bitcoin, but I don't think so. And I don't think these two things, the rumors, because gold has had these rumors for decades, and the same rumors are ever present in Bitcoin as well. I've noticed a couple times on the Telegram that people have been talking about paper Bitcoin at Coinbase. Maybe it's in relation to this recent rumor, but this is an ever-present thing amongst sound money advocates. They can't believe that the dollar's not collapsing. They have their mental model and it's not working out. So the only way that they can explain that the dollar has been able to remain and gold hasn't taken over, and now Bitcoin hasn't been able to take over, and the dollar continues to remain relatively strong, and the global reserve currency and all this, to square that dissonance, they say, oh, it's manipulation. So this is a classic long-term rumor that will always be ever present in Bitcoin, at least until they back Bitcoin or the dollar with Bitcoin. But anyway, let's continue. This situation also ties into exceptions to SAB 121, which previously prohibited banks from acting as Bitcoin custodians. BNY Mellon is rumored to be the first bank to receive an exception, and BlackRock likely aims to diversify its custody arrangements. So it's very simple. BNY Mellon, which is the largest custodian bank on Wall Street, they're going to get the first exception. And BlackRock, the largest asset manager, is wanting to diversify some of that to BNY Mellon. Maybe they even have some sort of deal. Hey, I'll jumpstart your custody of Bitcoin. We will diversify our ETF holdings to you. Something like that. That rumor is much easier to understand. It doesn't rely on any overly malicious actors and omnipotent abilities. So the manipulation, paper market manipulation, implies an omnipotent capability to manipulate markets. This doesn't imply anything like that, any superhuman ability. It just is common sense. They want to diversify some of the risk from Coinbase, which is a startup. Okay, that is billions and billions of dollars. How many Bitcoins do they have? 300,000, which is what, around 20 billion, let's say. They have $20 billion worth of Bitcoin. They want to diversify that a little bit. I mean, it makes sense. And it's good that it's going down to 12 hours. Why not? I saw a tweet. Why not 10 minutes? They should be able to make withdrawals instantly, at most an hour. Okay. But anyway, I see this as good. While details remain unclear, this positioning likely anticipates significant changes, including the SAB 121 exceptions and the listing of options tradings. Yeah. So also, as the options market is getting up and going, maybe they're making some tweaks to their process. It's totally understandable. Okay, next topic here, next headline for Bitcoin. Like I said, there's a ton of Bitcoin headlines. Then there's a couple macro headlines: price, mining, and layer 2. We'll get to all this as we go through here. I am checking comments every now and then. Let's do that right now. Roderick finally caught this live. Well, welcome. Thank you, sir. Florida Bitcoin, you've got me 18 times bullish this afternoon. Okay. Yeah, Florida Bitcoin. It is like reading that option stuff really gets you bullish. There's so many fundamental things that are stacking up on top of each other right now. I think the risk of any sort of downside move prior to the next leg of the bull market getting back to all-time high, I think that is very low. The risk of any downside. So yeah, it's getting to be exciting times. Okay, let's talk a little bit about Operation Choke Point 2.0. I just giggle every time that I hear the name. That it is taken seriously. All right, so Nick Carter has released a thread containing evidence that Silvergate Bank was deliberately targeted for termination by the globalists. After the bank got back on its feet, the Federal Reserve allegedly told them to reduce their crypto exposure to a nominal part of their business, which forced them into liquidation. Okay, I will grant that is probably what happened. This was released. I guess he's commenting on some stuff that was released in Discovery or as part of a lawsuit. So it's probably accurate. But what isn't clear is the reasoning. Okay. So he's trying to put this under the entire umbrella of Operation Choke Point 2.0. That is what I'm questioning, whether this alleged action is part of some Operation Choke Point 2.0. This targeted enforcement and potentially illegal requirements by the Federal Reserve certainly hint at the existence of Operation Choke Point. However, focusing solely on Bitcoin instead of scamming altcoins could have avoided this issue. So if they would have just gone Bitcoin only, they wouldn't have had all these problems. But they wanted to get in with the scams. They wanted to take a risk on the scams. They wanted to try to build scams into some huge thing. Ponzi on top of Ponzi. They make it so complex. They make it so obfuscated. They make it so leveraged. They tried to make it too big to fail, or really too big to fight. Okay, so these scammers, which I do put Nick Carter in there with his hedge fund stuff that he was doing, they tried to make crypto, quote unquote crypto, not Bitcoin. They tried to make crypto so big that it couldn't be fought. And that worked for a long time. The SEC was asleep at the wheel. Do they do customer protection or consumer protection? They don't do a very good job of it. But that is their mandate. And they could have done it, but they were asleep at the wheel because these scammers, either there was some corruption going on. Like I think with the SEC Hinman, he spoke at a Las Vegas convention and said that the SEC views Ethereum not as a security when it was completely up in the air. That was not an official statement, but the industry took that and ran with it. So they kind of tried to put the SEC into a corner, grow the scam complex of Ponzi on top of Ponzi so big that that you couldn't fight it. Now this all changed with FTX. When the Ponzi popped and FTX went down, Silvergate, yes, they probably had some bad dealings with the Federal Reserve here, but they were deep into FTX. And, the SEC and the Federal Reserve have been taking kind of a hands-off approach on this, but then FTX blows up. It's billions and billions and billions of dollars linked to all sorts of politicians. It looks like a real crazy hornet's nest. And so they say, no, you can't be dealing with all these scam tokens. And yeah, that liquidated the bank. But is that Operation Choke Point? Or is that just finally fighting fraud? Any sort of fight against fraud here would be considered evidence of Operation Choke Point. I say the crackdown on fraudulent crypto projects was long overdue. And I'm not a big government person. I don't, obviously, the smaller the government, the better. I don't like this, but I don't like fraud either. Force and fraud is the one like semi-legitimate thing that governments are supposed to protect consumers against. Force and fraud. Citizens against, I guess I should say. So, do you want fraud to run rampant? Even get a tacit green light from the regulators, with Hinman saying that the ETH was not a security. I mean, that's giving green light to fraud. Do you want that, or do you want them to actually crack down on fraud? So, I think that this crackdown on fraud was long overdue, but a crackdown on fraud will be labeled Operation Choke Point 2.0. While some will use this as evidence of Operation Choke Point targeting crypto, the real question is whether it was aimed at fraud more generally, not just crypto. So there you have it. I wonder what you guys think in the comments. Let me know down below. Is Operation Choke Point 2.0 just an overdue crackdown on scammy crypto? Or was it long-term planned and targeted specifically at the industry because they just don't like the industry? I mean, if it was targeted at the industry because they don't like the industry, it could be easily fought in court, especially now that the SEC has lost at the Supreme Court and they don't have their court system within a court system. So they don't have their special court system anymore at the SEC. They have to go right to the regular court system. And so now it will be very easy to do that. But it'll also be relatively easy to prove some sort of fraud by these scammers. Right? I mean, are you going to sue a Ponzi that has exploded? I don't know. So there might not be that many lawsuits in that direction because the Ponzi is over. But this is, I don't think it's evidence of Operation Choke Point. It's just evidence of a long overdue crackdown on fraud that was rife in crypto. And Nick Carter knew it. Everybody knows it deep down. They know it because it's the false claim after false claim. People invest in this because they're told it's going to be pumped to the moon. It's going to the moon. And it's based off of a central party doing some sort of upgrade in the future or adding some sort of capability or running the nodes even. Like they don't even run their own nodes. Some of these things like XRP has one node, and that is Ripple.com. It's a well-known fact that I don't know if it's more obfuscated today, but way back in the early days, it was shown that every single node calls home to Ripple.com. And so Ripple.com is the central node. It was a central party that controlled the code, that controlled everything about it, and told you that they were right on the brink of getting this government to sign on, right on the brink of taking down SWIFT. Banks switching over to Ripple to be used as the next Swift system, and on and on and on. False claim after false claim, fraudulent activity after fraudulent activity, and this was long overdue. So I wonder what you guys think about that down below. And before we get into the macro section, let's check the comments. Bitcoin, Florida Bitcoin. Yeah, the 200-day moving average. We'll get to that in the price section. Yes, we are taking on the 200-day moving average. And if we break out of this, there is little structural resistance above the price all the way to the all-time high. And yeah, we might be putting the 50,000s behind us forever. I used to sell Ripple on eBay from all their giveaways on every Bitcoin site. Yeah, I've known people in the past personally that have owned Ripple. One guy made some money on it, but it's a scam. It's a total scam. Okay, let's continue on with the macro section. Like I said, tons of Bitcoin news, not a lot of macro news. There was a lot with the Federal Reserve cut last week, 50 basis points as predicted, but not a lot of news other than the Federal Reserve really from the macro side. A lot of political news, but I try to stay away mostly 95% away from political news on this show. It's mainly macro. And I do think the overall political waves are dictated by the overall economic waves. So, like this rise in populism, it's not a coincidence that there's a rise in global populism at the end of a 75-year credit bubble. Because everybody starts thinking more zero sum, and all of your relationships, including international relationships, become more zero sum. Instead of 40 years ago, you would sign bilateral agreements and you would feel like, everyone's a winner. There's synergy, there's economic growth. But now at the end of a 75-year credit bubble, it's much more zero sum. And so you start getting populist turn in all of these countries more towards domestic, favoring domestic over international, favoring citizens over immigrants, that kind of thing. And so the political shifts, I think, are actually a result of the macroeconomic shifts. And so that's what we concentrate here on the show. Anyway, okay, Federal Reserve rate cuts, 50 basis points. I live stream the rate cut, just the actual drop of the statement, the SEP, so the summary of economic projections, and Powell's press conference last week. So you guys can go check that out here. It's a long one. It's like getting close to 2 hours, I think, on this stream, but we go detailed through his press conference and everything from the theatrics. I always comment on the theatrics of the whole thing, with everybody raising their hand when they know who's going to get the first three questions, to how he steps around things. Maybe he makes a statement that he lets something slip, and I point that out. Whether I think he let that slip, what that would mean, and how to just overall view what he's saying and translate it a little bit. So there were some good questions. Most of the questions were puff, easy softballs, but there was a couple questions that were a little bit more in depth, and Powell did not touch those with a 10-foot pole. He sidestepped it, walked around it, and so anyway, we talk about that on the live stream. You guys could check it out. We're still 44 days away from the next FOMC meeting, which is 2 days after the election. So the election, I've kind of worded this wrong here, which is 2 days after the election on November 7th. So the FOMC is November 7th, and the election is on November 5th. So there is no FOMC short of an emergency meeting prior to the election. The market is currently pricing in a 50-50 chance of a 25 or a 50 basis point cut. And once again, I'm leading towards 50 basis points. There is a chance of an emergency rate cut, but right now it doesn't look like that. A lot of times these emergency rate cuts, if you're hardcore into macro and you're watching the headlines and you're watching the right thing in the headlines, you can say, oh, something is brewing. We're getting more headlines about, say, maybe banking trouble, uh, banking stocks selling off, and there's things building. I remember back in 2018, 2019, that was the heyday of Zoltan Pozar. And he was talking, he was writing for Credit Suisse at the time. And he was writing all about the crunch point in September of 2019. And all these banks were there was going to be a crisis. And sure enough, then the repo rumble hit on September 16th, or September, was it? Yeah, I think it was September 16th of 2019. And Zoltan turned out to be right about that. He's not right about a lot of stuff, but he was right about that. And so we saw it coming. So a lot of these things you can see coming. And right now, we don't see any real or I don't see any real chance of a need for an emergency meeting. Of course, that can change as we get into October, the end of Q3 period, second half of September, first half of October. It's this very volatile period, and so we could see some things pop off. But right now, there is no need for an emergency meeting, and yeah, so I'm leaning towards 50 basis points in the October meeting, or no, it's November 7th in the November meeting. Okay, next topic is China. China launches more stimulus. PBOC cuts rates, announces rare press conference on support for the economy. So this is a headline from Zero Hedge. I'm not really going to go through this very much other than to say I wanted to keep it in the headlines. I was talking on Telegram before we went live. This is like the biggest geopolitical event, maybe macroeconomic, I should say, event of the next 20 years is going to be the decline of China. Going back 20 years is the rise of China. Now it's going to be the decline of China. Their economic model is over. We should expect to see more and more stories like this. And it's just getting worse. It's going to get worse, and it's never going to get better. Some people say, oh, it's going to get worse before it gets better. It's not getting better, people. Their demographics are absolutely atrocious. Xi is bringing back Marxism in a big way. Populism is on the rise. So the globalized order that fostered the rise of China as an export manufacturing power is going away. So it's going to get worse, and then it's not going to get better for China. So here's a chart about their M1. This kind of made the rounds. It's just crashing through the floor. They're suffering a lot of deflation over there in China right now. A lot of people are saying, look, this is horrible. Deflation is the enemy of credit-based money. And so if you want to save your economy here, they're going to have to do some sort of quote unquote money printing, some sort of bailing out of their banking system. But do they want to do that? Does that conflict with Xi's vision? Or is he just going to say, hey, let's cook the books here, guys. Let's cook them and go from there. Anyway, heavyweights like Macro Alf are now jumping onto this China crisis. And I posted this thread in Telegram earlier and kind of walked through some of these ideas. He does a good job here. I will add that he did not talk about demographics. And that is, I think, probably the biggest piece for why it's not going to get better. They're losing millions of people a year from their population, and not looking good. People, as the real estate market crashes over there in China, 70% of household wealth was in real estate. And if real estate gets cut in half, that means household wealth is cut by 35%. Horrible. So where is the domestic consumption going to come from in this deglobalized world? It's not going to show up. It's just going to keep getting worse. And, they don't want to bail out the people, because if you bail out the people, they will riot. You want to do something like, seriously, a debt jubilee to probably like regional governments or something. I could see something like that. They are trillions and trillions in debt, and they're going to have to do something drastic. But Anyway, check out that thread by Macro Alpha. Okay, that is all the headlines. That took us a while to get through because the Bitcoin headlines were so vast. Let me see what's going on here on the comments. Dex Invictus, China is big fooked. Yes, it is. I remember years ago. I don't know if you've been watching my stuff for the whole time, but I debunked the Thucydides trap. So that was a idea by Graham Allison. He was a Harvard tenured professor of something, maybe political science. I don't know, but I can't help but think he was just a CCP uh, operative because he came out with this idea for the Thucydides trap, and he based it on like the one of the big works in the formation of Western civilization, going back to ancient Greece and Thucydides writing about the Peloponnesian Wars. And so it felt very Western, okay? But from there, he took it and he applied a rising power and declining power as the rising power in Athens and the declining power of Sparta, and how there was inevitably going to be a conflict there. And then he said, okay, that's China as the rising power and the United States is the declining power, and there's inevitably going to be conflict there. But I tried to flip that completely on its head. First off, China is thousands of years old. The United States is the new rising power. China is the declining power in this scenario. And plus, Sparta won anyway. So no matter how you put it, it's a bad analogy. And then I took the opportunity to break down why China is failing and why it will continue to just grind lower and lower, especially as they go back into Marxism. Why the Belt and Road, that's one of the most beloved things by the academics in the United States and think tank people in the United States. They love the Belt and Road, and they were so scared of it. They thought that's going to China is building, building, building everywhere. They're making so many friends around the world, and they're going to take over the United States. It's completely wrong. Belt and Road is like, okay, so let's just say there's like a place in Southeast Asia, and it's just jungle. There's no beach. Maybe there's some cliffs right by the beach or something like that. And there's a small fishing village, and China comes in there. It's like, we're going to build this huge $1 billion port right here. Well, why on God's earth would they build a $1 billion port in a place that's not needed? It's just a waste of money. It's just flushing money down the toilet. It's also like debt diplomacy. So they build these things, and then they say, well, if you can't repay us $5 billion in 5 years, we're going to seize this land. That's not going to go over very well. I mean, another example I use all the time is in Kenya, the Nairobi, the train. It's not a high-speed train. It's just a regular train line from the port city to Nairobi. It costs so many billions to build, and it loses money at a devastating clip for the Kenyan government. So they're stuck paying for this thing that everyone thought was so great. China's making so many friends. Look at, they're building railways in Africa, and it just all it's doing is losing the Kenyan government millions and millions of dollars a year. It doesn't even provide any sort of benefit at all. And so there's a reason why these infrastructure projects weren't built, and it's because they're not productive. They're uneconomic. Say what you will about Western bankers. If they can make a profit, they're going to lend you some money. But if their calculations say, I can't make a profit off of this, they won't be able to repay the money, then they're not going to do it. But then China swoops in. Oh, we can do it. We can give you $5 billion to build this bridge to nowhere. So anyway, that was the Belt and Road. That was the debunking the Thucydides trap. It was just all a bunch of garbage. All right, let's move on. As you guys can tell, I do think China is going to be the biggest, the bigger they are, the harder they fall. They're going to be the big one to fall here in the next 10 years. Okay, let's go through price analysis. Last week I said this should be slow into the FOMC. So into Wednesday, it should be slow for price, but it has the potential to rally in the second half. And that's exactly what we saw last week. That was right here. So Monday was, I think, this day right here. We dipped a little bit, went back up. And then this Friday happened. FOMC was right towards the top of this candle. And then we rocketed up to the 200-day moving average, which is probably where we are right now. Let me go and share my tab over here. Live price 63,372. So very close to where we were for the report earlier. We remain right under that 200-day moving average. I mean, I don't know how people can look at this type of chart where we see all of this around the 50-day. Wick touches the 50-day right here, right up into the 50-day cross, the death cross. And I called this. I said, we're going to rally into this death cross, and look at that big old candle right into the death cross. Staying under it, touching it multiple times, fondling that 50-day moving average, and then boom, slice right through it, can't hold it, come back. And then we kind of meandered around the 50-day moving average here, and now we're held down by the 200-day moving average. I think that, this is an important level. Everything above this, there's not a lot above this. Even this right here at around 68 to 70,000 is not very strong resistance. So, it can really rocket to all-time highs. It's not going to take very much at all to do that. Okay, let's go back to the report. So that is what I was showing here on this chart. We are currently challenging the 200-day moving average, which has given us more resistance than I envisioned. However, there is no resistance above it. Okay. And I wanted to look at this quarterly. Did I say anything about the quarterly? No, I should have put a little blurb in here about the quarterly, but you can see the quarterly is now positive. So third quarter is positive, September is positive, and we're going into the last week of September and into Q4, which should be very, very bullish. So we have made a big turnaround. This is a very bullish candle with a long wick on the bottom and going higher, so ending positive. The bulls are winning out over the bears right here. Okay. I usually measure the cycle from the halving. And if you guys have been watching my stuff, you'll notice that I don't have a chart on this one, but I have used a chart in the past where the left axis is the halving and showing the price since the halving. And right now we are like in the worst cycle ever, most painful cycle ever from the halving. But if you take it from here, these are the lows of the previous cycles, okay? And then they chart where we go from the lows. Very, very interesting here. Look how tight this section is. That's almost unbelievable, especially right here. My goodness. It is basically identical at 4x the bottom at this point in time. That is just so amazing to me, how narrow these are. And it looks like we're going right back through that same area here. So fascinating. What else do I say? And that's it for that. The above chart would imply a multiple off the bottom of more than 20x. So over here is the multiplier off the bottom. So 4x, 8x, 20x, 100x, whatever. And you can see the last green one, that's the last cycle, 2021. We got to roughly 20x off the bottom. That's what that looks like to me. So if we revisit that, if we have that same type of performance, that or less is the understanding at this point. And so that would take us to 309,500 from a bottom, and then 20x 309. Pretty interesting. I like it. It's right in a conservative band. I would say a conservative band for this cycle would be 200 to 400. The people that are talking about 500,000, a million this cycle, those are getting, a little bit into the cosmic realm. But 2 to 400 is 200 is very conservative in my opinion. 300 is legit. So, all right. This 6-month heat map still shows the overwhelming gravitational pull of liquidity is up at the 70 to 74K region. The real fun starts at a new all-time high. So you can see just glowing liquidity up there, 70,000 to 74,000. I think it's over 20 billion in liquidity up here in this zone. So that is definitely going to be attracting the price, and those are buys. Okay, so when you hit the liquidity, you're liquidating shorts below you're liquidating longs, but here you're liquidating shorts, and so you're forcing these people to buy. So that could really rocket the price higher. It's such an overwhelming amount that it's going to have drastic effects. I don't think we're going to come up and just touch that zone and then come back down or anything like that. I think it's going to have 20 billion is going to have such a overwhelming force on the price. I think it's going to really shoot the price higher at that point. Okay, the last week has seen some major catalysts come to the fore: spot ETF options, MicroStrategy buying, and a return of rate cuts. This has the ability to become quite explosive for Bitcoin once it breaks this last line of structural defense until nearing the all-time high. So as long as when it breaks the 200-day moving average, I think we are going to attack that all-time high very, very quickly and then go from there. So with the pause at the 200-day, it opens up the opportunity to test some lower support, like going back to the 50-day before the price can break through. I do not think that is likely, though. However, gains happen fast. Once we break the 200-day, it could be within a couple of trading days, and we're at 70K. Remember the fund strat guy, Tom Lee? He said that most gains happen in 10 trading days a year for Bitcoin. So it could happen very, very quickly. All right, and that's all I have for price. Let's check Telegram, see if there's any other comments here. No. All right. Let's move. Keep moving. I remember that line from Jason Bourne novels. He's always thinking, move, move, move. Let's keep moving here. Going on to the mining headlines. China controls 55% of Bitcoin mining network despite ban. And we hear this every once in a while, but this rumor has come up again. And I wanted to go through this and talk about it a little bit. So despite its stance against crypto, China still controls 55% of the Bitcoin mining network. That would be 55% of Bitcoin mining hash rate, even though it has a ban on the asset. Indeed, the country is a key player in Bitcoin mining despite the restriction that was imposed on the asset class more than 3 years ago. The country maintains control over more than half of the entire global network hash rate, according to CryptoQuant CEO Qi Young in a post to X, formerly Twitter. Sorry if I mispronounced that. No way I'm getting it right. Discussed the dominance of the industry shifting from the United States. Moreover, he discussed how it has transferred to the Eastern Asian nation. All right. Sheesh. I don't think this is true. Mining used to be in China. It used to be dominated in China, and you would see distinct patterns. Okay, you would see when the wet season happened, and when they were moving their miners to more remote hydropower, and then back. So we don't see that anymore today. So it kind of strikes me as odd that there would still be 55% of Bitcoin mining in China. I wonder how they're using that or how they're measuring that. I can see something as simple as a mistake of a Chinese mining pool then saying, "Oh, that's where all the miners are located." Of course, pools are just nodes, basically. They're nodes that pick the transactions and order the transactions, and then the miners that are around the world, and they're aimed all their hash power at that node, looking for the block. And then they find the block, and that's how they mine. So they pool their resources and they mine. And the one node might be in China, but I don't think there's that many miners in China. Now, are there some? Sure. Are there 55% of the network? No. I disbelieve this. If you guys know anything else other than what's these headlines and rumors, let me know. But the complete mining kind of seasonality is different. There is no wet season for Bitcoin mining anymore. So that would make me believe there isn't really all of this stuff going on in China. All right, I wonder what you guys have to say about that. Hut 8 and Bitmain to launch next generation ASICs Bitcoin miner with liquid to chip cooling. Just took out a real quick clip from this article. Hut 8 plans to deploy the new miner in the second quarter of 2025 with an initial hosting agreement handling approximately 15 exahash. This deployment, facilitated by custom-built data center infrastructure deployed in-house by Hut 8, is a key part of the company's strategy to expand its computing power across Bitcoin mining and AI compute sectors. And I must have clipped the wrong paragraph. I thought that had something about this liquid cooled, but you can see like these ASIC miners, they're becoming more and more liquid cooled. So they're not as noisy when they're dunked, submerged in whatever liquid that they're using, coolant. But it would be interesting to see from the factory, you have chips that have all the hoses right on top of the chip itself. Instead of submersing it maybe in completely, it's just the chip that I don't know if that's correct or not, but there are things going on here with Bitcoin mining, continuing to push the envelope on technology, on different management styles, different business. I guess what was the term I'm looking for? Business plans, like different ways. Are they taking on debt? Are they not trying to stay debt free? Are they mining the ordinals? Are they not mining ordinals? All of those things. So Bitcoin mining is definitely going through a transition phase here. As you can see, the hash rate is coming down. I mean, it's been pretty flat, even though we've had all-time high hash rate and all-time high difficulty. It hasn't been growing like it has in the past. So we're kind of in this very slow period for Bitcoin mining, at least on the just total gains, like adding a lot of hash rate. Now they're starting to tweak with things, the way they run their business, and stuff like that. So, all right, let's move on. Difficulty and hash rate. So the difficulty jumped last week to all-time high, but it has promptly fallen off. Hash rate is down significantly on the 7-day rolling average. So you can see the brighter line is a 7-day rolling average. This is the day-to-day hash rate, which is estimated off of block times. So there's no way to actually measure every single computer that's mining Bitcoin, but you can get an implied number by the speed of the blocks. And so you can see there is quite a bit of volatility here, maybe a day-night cycle on these days here. But all-time high difficulty, hash rates coming down, and we'll probably see a 5% reduction in difficulty tomorrow. Mempool. Bitcoin's mempool lost several more megabytes this last week, down to 96 megabytes. Most of the remaining transactions are very cheap, in the 1 to 2 sats per virtual byte. And you can see this pink zone. That's the very cheap amount, the cheap transactions that have been waiting for a long time to get confirmed. These higher fee transactions have been chewed through, and the network is ready to chew through these last ones. So we will see how that develops. But again, you also can see that this is a lower revenue period for miners. Fees are extremely low. Going back here, you can see you're getting, maybe 5 times as many fees. It's still a small percentage of the overall revenue, where fees, I don't know if it's up to 5% yet, but maybe say 5% of revenue comes from fees. And when you're up here, but now you're down here, that 5% has shrunk a lot. So it could affect miners' bottom line, especially those miners at this period when price just is not taking off and they're being squeezed to continue their operations, continue to add hash rate, continue to do all of these things, but the price is not really agreeing with them after the halving. So we will see how this develops, but that is the news from the mining sector. And layer 2, I just said nothing significant to report. I didn't see any major stories that stuck out to me. Okay, in case you missed it, all the stuff I put out this last week, I had a big story on Forbes, the truth about Bitcoin, busting the biggest myths. Make sure you check that out. And let me take a look one last time at any comments. Dex Invictus signing off for right now. All right, see you later. Thanks for joining. Let's check out Telegram. No other topics from Telegram. So, all right, guys, thanks for hanging out. We'll see you on the next one. Make sure to check out bitcoinandmarkets.com. Hope you have a great start to your week, and peace out.